And now for our next news special report.
Now in our special report, we peel back the curtain on the Federal Reserve's financial floundering and gold's unprecedented rise. What's driving the surge in gold prices and how is it linked to the Fed's historical losses? Stay tuned as we unravel this complex web and expose the hidden truths beneath these economic indicators. You want to hear my final thought on why the story matters to every American striving for financial security. So don't go anywhere. The details are coming up next. Before we dive into the heart of today's financial whirlwind, here is a quick reminder from our friends at Noble Gold Investments. Are you feeling uncertain about your financial future? Well, you're not alone. With the Fed facing historic losses, it's more crucial than ever to consider securing your assets. Noble Gold makes investing in gold and silver straightforward. Remember, they're offering a free quarter-ounce British gold standard coin for qualified accounts. If you're interested, visit nextnewsgold.com. You'll find the link down below. Or call the number on the screen, 877-646-5347. Noble Gold is your beacon of stability in turbulent times. Now let's talk numbers, as the Federal Reserve reported a shocking $162.9 billion in losses. Gold's value did just the opposite, climbing to a breathtaking $2,400 an ounce. It's clear when confidence in our financial institutions waver, gold stands strong. But why the stark contrast? Well, the Fed has been hemorrhaging cash, facing real losses as it pays out hefty interest on reserves held by megabanks and engages in costly reverse repo operations. At the same time, it's a perfect storm for gold. With global tensions escalating and inflation fears mounting, investors are rushing to the safety of gold, pushing prices to historic highs. Now, the trend is not just a blip on the radar. It's a loud, resounding bell ringing across the financial landscape. The Fed's strategy, once a bulwark of our economic system, is now under scrutiny. Paying more to finance its debt than it earns, the central bank's sustainability is questionable. As Jerome Powell downplays the severity, calling these paper losses, savvy investors and the broader public are not easily fooled. They see the Fed's strategy for what it is, a risky bet in uncertain times. Watch this.
Gold is having a moment. The buying price of gold futures has hit multiple record highs this year. Since January 2nd, it's risen more than 14% in value. That's more than the Dow Jones, NASDAQ, and S&P 500, which have also hit record highs. Gold has historically been viewed as a safe investment because for centuries people have treated it with intrinsic worth, less influenced by the passions of the moment. The last times it peaked were following the 2007 to 2009 financial crisis and after the onset of COVID-19. But gold's current rally is happening without a recession or a pandemic, and inflation and interest rates are both expected to fall. So what is behind the gold rally? Here to explain is Campbell Harvey. He's a professor of finance at Duke University and co-author with Claude Erb of The Golden Dilemma. Thank you so much for being with us. Who's buying the gold?
So it's very interesting. You would think that retail investors are piling into gold. And the usual way that you would invest in gold is to buy an ETF. But that's not really the case. If you look over the last 10 months, there have been like negative flows or outflows from the gold ETFs, and actually an increase in the Bitcoin ETFs. So this is, in my opinion, mainly institutional investors like hedge funds that are speculating on the price of gold. As you mentioned, gold has done well over the last quarter, but over the last year, it's lagged the S&P in spectacular investments like NVIDIA and others.
As we watch this unfolding, it's essential to understand the broader implications. The Fed's losses mean less money for the U.S. Treasury, leading to deeper national debt and potential impacts on every American's pocketbook. The ripple effects could be profound, affecting everything from government spending to Social Security payouts. But there is a silver lining, or should I say, a golden lining. As traditional financial structures show signs of strain, gold's allure only grows. Its prominence this year is not just a reflection of current economic jitters, it's a testament to its enduring value as a hedge against uncertainty. So as this drama continues, the choice made by Policymakers now and individual investors alike will shape our economic future. Will they heed the lessons of the past that gold's rise is signaling? If you got value from this report, tap subscribe. My final thought is next. Now, tonight we've seen how gold not only reflects our hopes for stability, but acts as a critical barometer for our economic health. In an era where traditional financial institutions like the Federal Reserve stumble under the weight of their own decisions, gold shines as a beacon of safety and assurance. It's not just about investing. It's about understanding the undercurrents that shape our fiscal reality. As we navigate these turbulent times, remember, gold isn't just a metal, it is a message, urging us to seek security in the solid, enduring value that it represents.
Congratulations, you made it to the end of the video. Now keep up your quest for truth with this next news report. And if you found our channel enlightening, join the millions who agree with you. Tap subscribe. Thank you for watching the Next News Network.